Scott Bauer, the CEO of Prosper Trading Academy, joins us now for his trade of the day. Happy to have you on the show.
Always great to be here.
Before we get to your trade, love to get your perspective on the market.
You know, it is anything but the summer doldrums right now. Every day there's a new headline, something else moving the market. You know, if it's not the heart of earnings season, which we're in right now, it's tariff talk, it's trade talk, it's the dollar, it's the commodity space, which between what we're seeing with energies and oil and then the metals with gold, you know, there's a lot going on for summer trade.
And it's an options expiration day.
It is an options expiration day as well.
Just to add to the fun.
It's all coming together here, but you know what? It's great for trade. It's great to have the activity, especially at a time when we normally don't see it.
Let's take a look at your Prosper AI indicator. What is that pointing towards?
You know, we're looking at T-Mobile. Came out with earnings. Street obviously didn't like it. And what I'm looking at, Angie, is it really rejected on high volume at the 200-day moving average. I mean, just a major rejection. We're looking for a continued downside move off of that. So now that earnings are out, volatility's down a little bit, but surprisingly, implied vol is still elevated, even though it's after earnings. That to me tells me that it could be pretty vulnerable. So we're actually looking to buy a put spread going out a couple weeks from now. It's the 58-56 strikes put spread, August 3rd expiration, so about 2 weeks from now. Do that for about 50 cents. The reward to risk is fantastic. Now this is a bearish play. We are looking for a downward move, continued downside move in T-Mobile down to about that 56 level, which right now, that is what the option market is pricing in as an expected move.
Does the implied vol being high tell you that there's some angst about this stock and that people are willing to pay more for these options contracts?
Right, and especially right after an earnings report, we typically see implied vol just get absolutely hammered. Mean reversion comes back to where it's should be trading over the normal period of time, yet T-Mobile, it's still elevated. Not quite as much as it was obviously going into earnings, but it's still elevated.
And you're feeling good about your reward to risk?
Love the reward to risk. Can be a $2 wide spread at its max. I'm paying 50 cents for it. 3-to-1 reward to risk.
Hey, how's iRobot doing? You talked about that the last time you were on the show.
We did, and you know what? It hasn't moved. It hasn't budged. But we know that because earnings are coming out next week. So the stock is really just kind of building up a base here. We're in it for the earnings play and beyond because we have this upside call spread going all the way out to September. So by the time we talk again next week, we should have a move in iRobot, and it'll be a little bit better off to evaluate at that point.
We will check back. Thank you, Scott.
Thanks a lot, Angie.
We have to wind it down for today, but we are on social media. It's Business First AM on Facebook, YouTube, and Twitter. Coming up next time, we'll have an SEC attorney here talking about investor scams. Don't miss that. I'm Angela Miles. From all of us here at Business First AM, thank you so much for watching our show.